The housing market is starting to show some signs of life. It is Wednesday, September the 24th, and this is Markets with Megan. If you like this podcast, please subscribe. You can hit that alarm bell, share it with friends, family, or colleagues. But we're here today to break down that economic data, specifically since we got that Fed rate cut last week that everyone was anticipating. And now we're starting to see, does this have any impact on the housing market? The housing market's been struggling for years with high interest rates and low inventory. So let's break down a couple of the pieces of information we got this morning. First of all, the weekly mortgage application. So this comes out every week, and this is more of a real time, may be impacted by that Fed rate cut last week. We did see a modest increase in mortgage applications, but this is on the back of the prior week, which jumped almost 30%. So it's okay to see a little bit of a slowdown there. The mortgage rate last week the mortgage rate currently, has come down with what the Fed has done. It's about 6.3%, and this is the lowest mortgage rate since the month of October. So we're seeing people more inclined to take out mortgages and then also refinance some of the mortgages that they may have. Realtor.com did report that at the end of 2024, there was about 20% of the outstanding mortgages that had a rate more than 6%. So we're starting to get into that nice refinancing activity. Now, we also got information on both building permits and new home sales. These are for the month of August. So we're not really going to be able to say this is because of the lower mortgage rate. At this time, we'll get more information in the coming months on that. But good news from this front, specifically on the new home sales. Building permits declined slightly, but when you look at new home sales, they rose 20.5% for the month. That's a big increase. All of the regions that we looked at did increase. The median price, though, this did jump to a 3-month high, and it's up 5% on a year-over-year basis. So people are still inclined to go out and buy these new homes with the mortgage rates that haven't seen the full benefit of the decline from the Fed funds rate. And also keep in mind, mortgage rates are based off of long-term interest rates, and we've seen some volatility there from the long end of the curve. The month's supply now of new home sales is at the lowest level we've seen in more than 2 years. So we will keep watching this in the coming months, but keep in mind, prices are higher, inventory is lower. We're seeing more activity, though. That's a good sign. That's all that we have today. We'll be back this week. We'll get the Fed's preferred inflation indicator tomorrow, that PCE core, plus we'll get the third reading on GDP for the second quarter of this year. If you want to see a history of our podcast, you can go to marketswithmegan.fm. Thank you.